You're listening to The Money Hour with your host, Tina Mitchell, and co-host, Keelan Harvey on Alternative Talk AM 1150. Now, back to the show with local mortgage experts, Tina Mitchell and Keelan Harvey.
And you're listening to The Money Hour, 1150 AM KKNW, the Friday, June 12th virtual show. Because of COVID-19, our show is temporarily moved virtually, but you can listen to us on podcast or on air on Saturday at 3 p.m. with a rebroadcast on Sunday at 8 a.m. I am your host, Tina Mitchell.
And I'm your co-host, Keelan Harvey.
We bring in studio each week the best of the best experts in our local market on everything regarding your money. We're here to help you in today's economy. And now in studio, we have Cory, Brewer, and Rob Gasca of Windermere Property Management, Lori, Gill and Associates, the rental market's reaction to the COVID-19 pandemic, right here at 1150 AM KKNW. Welcome, Cory and Rob. Thanks for joining the show today.
I'm excited to be here.
Pleasure's all mine. Pleasure's all mine. Thank you.
So let's start out with Cory. Cory, I know we talked a little bit about in our panel conversation about some of the challenges. What do you think, and for you guys, I mean, I know the cards are really stacked against you on how rapidly things are coming, and you know your people are drinking out of a fire hose from the education that you have to give them in this process. So what is your greatest challenge that you think right now as far as residential rental housing and how you've kind of overcome that over the last few months?
Yeah, thank you. Going back to kind of what we were talking about earlier, there's a lot of panic and uncertainty in the world in general. And I don't know that there's any industry that has been unaffected by this. I think it's touched everyone in its own unique way. But our biggest challenge, again, has just been here's the rules for today. And then guess what? They change tomorrow, and then they change the next day, and then they go back to the one from before. And so it's been a bit of a scramble here on the back end from a correspondence standpoint. I mentioned earlier, we've had to create a bunch of new forms that we've never used before. The real estate industry and rental industry is very form heavy. And so we've got to have all of our T's crossed and I's dotted. And that is something that every single department within our company needs to be very conscientious of, because one of the biggest changes has been the tone of communication that we're allowed to have with our tenants. We've had to word things very differently. It's maybe the same message that we're getting across, but we've had to significantly change how things are worded. And so we've really had to kind of relearn how we're doing a lot of our everyday normal processes. And then again, we just learned that. And then the following week, we kind of have to do it all over again because the rules have been restructured again. So it keeps us on our toes, keeps us engaged. And so it's not all bad.
Yeah, and I like what you said, Cory, because I hope what comes out of this is majority of people's bad habit of not being able to adjust to change will now be their new habit of being able to adjust to change, because everybody's been forced to have to change. And that is really what we need to do to continue to grow in our businesses. And so really excited to see if everybody now has enough time to create better habits around embracing change. So Rob, what has been your greatest challenge in commercial property management over the past few?
Well, I can kind of piggyback on what Cory was saying, and communication. And I think in terms of from a residential standpoint, making sure that they're following all the rules and the regulations is important. On our side, on the commercial side, it's a little bit more different, as I mentioned, balancing compassion and empathy along with making solid business decisions. What we're doing right now is we're almost like a business coach, and Lee motivated me beyond over the last couple of minutes. So thank you. We are kind of like a business coach, and we're evaluating the needs and the financial position of each owner and tenant, evaluating the tenant vertical market. Are they retail? Are they office? Are they essential? Can their employees work from home? Are they able to generate revenue? Or are they completely shut down? So that was very invasive. We had to be able to understand, do the ownership groups of these businesses have the resources and the bank accounts to sustain 2 to 4 months of a closed economy? A dental office versus a drive-through independent coffee shop, ownership and resources are different. And so we have to be able to balance those. We're again on a personal or on a business, being a little bit more invasive is, we're asking for revised business plans to determine if the plan makes sense. Are they able to get PPP? And if not, what are the challenges that they're facing? So we would want to go above and beyond to be able to assist them, because not every business owner has the same level of resources or tools or, education for that matter. So we're evaluating all that, along with making sure that we are up to date with every single resource that we have. And that enthusiasm that Lee was saying, that was what energized us and my team, was to be able to go in and really try to find ways to help them, change their methods, because no matter who you are in this post-COVID world, your methods are going to change, whether they're going to be remote in terms of meetings, remote, meetings and conferences, just so many different things that we tried to add to assist our tenants and owners, but also balancing the needs of Lord Gill & Associates as property management. So those are some of the biggest challenges.
Yeah, I'm going to give you guys a shout out, because me and Tina, we always talk about this, is get experts. You guys are a huge support system for people. One of the examples that we talked about at one point was like a restaurant. Like, I heard some statistic from, I forgot what it was, one of these big restaurateurs or whatever you call them. He said that if your restaurant has 1.25 million in revenue, you might get 150,000 net. And so, like, without that translation of goods into, making money, which is a lot of times they're not making money till the last couple of days of the month. All these challenges, these business, especially on the commercial side, it's crippling and really scary. So for those out there, a call to action, get some experts in your corner like Rob and Cory, who can help you navigate this. Not your first rodeo. You guys are dealing with every business under the sun right now. So, you guys can go out there and assist, and people can rely on the fact that you can have some solutions for them. So, if you're a commercial business owner, reach out to these guys and get some knowledge, because that's all you got at this point. And who knows what this is going to turn into and how long it's going to be. Now, Cory talked on the rental market side. If you're investing into properties, that translates into collecting rent. If if you own a property and you're not getting any rent, you're taking on that mortgage. That could be a huge issue for somebody that owns a rental property. So how are you helping, Cory, on that front of things? How are people doing on collecting rent, and how are you supporting your tenants, on that end of the business to help them to get through these tough times?
Yeah, thank you. Glad you brought this one up, and this is something we're really proud of, and it's something I'm excited to talk about. For the past few months, we've actually been able to collect over 97% of rents on the residential side for our clients, which is higher than most reports you read out there. So we are really, really proud of that number. I think that speaks to the level of high touch relationship that we have with our tenants. And probably the leap that I want to take is what we've been able to do in helping our tenants. We were able to connect dozens of our tenants with an organization called Housing Connector. I think everybody out there, if you have an interest in residential housing, housingconnector.com, they were able to provide rental assistance for dozens of our tenants, who in turn were able to make their payment, not fall behind, and that keeps our clients whole, which is fantastic. That's a win-win for everyone. And the other stuff that we're pretty proud of that we were involved in was very early on with this, we made the corporate decision to stop charging late fees of any kind. And we also started offering people payment plans Now, both of those things eventually became legal requirements, but we were kind of on the leading edge with those types of things. Rob was talking earlier about the compassionate nature of the relationship. And I'm really proud that we kind of took a leading step in that direction.
Love that. So Rob, let's talk about what you're anticipating as far as changes to the office and the retail leasing landscape going forward.
Well, boy, oh boy, landlords aren't going to really like to hear it, but it's going to change from a landlord market to a tenant market without a doubt. It won't be crazy, but certainly up to 10% drops, in certain segments, in certain markets. Lots of subleases. Lots of tenants are going to be unable to fulfill their leases. And so we're going to, in their behalf, put their space on the market to get a sublease to cover their current lease. The need for office space will be much lower. It's interesting because right now, being able to work remotely, having employees work in different shifts, the percentage of employees that you're going to need or that are required as far as capacity now is going to change, office space from 50,000 square feet of need to 40, from 40 to 30, from 30 to 20. So there's going to be some movement there. I believe that, retail is going to struggle. There's no doubt it was struggling before COVID. And right now with the capacity restrictions, you're definitely going to see some changes there. What we're trying to do more than anything is innovate. I believe now what I've learned, what my team has learned, and what we're understanding is that we're going to have to be bigger and faster and stronger and smarter. We're going to have to work more intelligently. We're going to have to find ways to continue to produce business as usual. And there's a good book, Who Moved My Cheese? I don't know if anybody's ever read that book, but it's about love that book. It's one of the basic fundamental business books that I read over and over again. And that means that you need to adapt to any situation, any adversity, anything good, bad, or indifferent. Your business is always going to need to innovate and change. And so that's really what I preach, not only to my team, but to all my tenants and owners, is that we're going to have to compete, and we're going to have to compete at a higher level. And our energy levels are going to have to be that much stronger, that much better. To quote Lee. Thank you, Lee.
Well, guys, unfortunately, the time just blew by. We're out of time, unfortunately. So I just wanted to leave it to you, Cory or Rob. What is some final advice that you could give on the rental side of things, as far as any, on the legal side, or, what advice would you guys leave based on where we're currently at and what you guys are seeing out there for our listeners?
Okay, I'll give you two quick ones. What we like to see as an industry is that this panic doesn't turn into negative long-term legal changes. And so we're working hard on the back end with our legislators at every level to craft targeted, realistic policy that will help the people who actually need it, because there's a lot of people who need help right now, but it's not a blanket policy that is privy to people taking advantage of it. That's number one. That's a big priority for our industry. Number two, what I see happening in the residential market on the buyer side as well, I think you're going to start seeing people move out of denser in-city high-rise living and spread out to the suburbs for health reasons, for maybe don't need to commute to work anymore because you're working from home reasons. There's a lot of factors that go into this, more square footage, and I think you're going to see an uptick in the accessory dwelling unit, the ADU housing product. I think you're going to see that grow for sure. So there's my very quick wrap up of those two topics. Thank you.
Love it. Well, thank you both, Rob and Cory, for coming into our show. And Leigh, thank you again for being here. It's really fun to kind of have this new platform to do temporarily. So really appreciate you guys. And this is your host, Tina Mitchell.
And your co-host, Keelan Harvey.
Your local mortgage expert signing off for the day. Enjoy the rest of your Saturday, and we look forward to talking more money with you next weekend right here at 11:50 a.m. KNW.